Hello, good morning. You're watching Buy Now, Sell Now on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well. I can hear the beep coming in. I think there's a buzzer that you have every time we start a show, right? But markets quite subdued, right? Opened in the green, gave up all those gains, day's lowest point almost as of.
Absolutely, Vinny. Subdued is a word that you can use for the benchmark indices, but you can't use subdued moves when it comes to the broader markets, because there actually you're seeing a carnage actually take place, be it the mid cap index or the small cap index. Now at the day's lowest point, that's mid cap index down 2%, small cap index now down 3%. If you look from the day's highest point, mid cap index has fallen about 2.8%, and if you look at the small cap index, that fall from the day's highest point for the small cap index is in excess of about 3% or so. You'll have that coming on your screen. There you go, 3.6% off from the day's highest point coming in for the small cap index. So yes, the carnage is pretty steep, pretty painful when it comes to the small cap index. And also of late, with the last few trading sessions, we've seen that actually pain only accelerate when it comes to the broader markets. Let's take a look at the other set of sectors as well as stocks and what they are doing at this point in time. Let's take a look at what exactly ITC is doing, because that block deal has been done. 3.5% stake is what BAT was offloading. Also, if you look at the total amount of block deal that took place, it is 3.6% block deal. You also saw some about 40 lakh shares and 30 lakh shares of block deal take place in ITC. So there you go. ITC holding on to gains of about 6.6%. Nestle, Britannia are the other set of gainers. ICICI Bank also is seeing uptick of about 1% or so. While on the flip side, it is the power names that are seeing are actually going through a tough time. So you have Power Grid, that's the top loser, along with NTPC, Adani Enterprises, Adani Ports, Coal India, all of them declining in trade. The advanced decline ratio very much skewed in the favor of declines as we speak. Talking about the sectoral indices then is the FMCG index and the IT index that's holding on to gains. So yeah, defensives are trying to actually, as always, do what the market do opposite of what the markets are doing at this point in time. So yes, Vinny, a subdued day coming in for benchmarks, not for the broader markets.
Absolutely subdued day coming in for the benchmark, but not for the broader markets. Carnage, like you mentioned, is what is seen for the broader markets. But you know, we did have the chief economic advisor talk today at an event, and he was speaking at the 5th SEBI NISM research conference, and he did talk about that there's a rise in small investors in the F&O space and hints at the short-term euphoria in the market. The regulators are doing a fine job of keeping frauds at check. Listen into what more he had to say.
Right now, what we have, both in terms of mindsets and in terms of public reactions, there is a certain adversarial attitude that we adopt vis-a-vis regulators. Yes, there can always be a dialogue, discussion, differences with respect to specific measures. But the underlying focus that the regulators have, which is to ensure that we stay stronger for longer, rather than get caught up in the immediate euphoria of our growth rates and market valuations, and also try to make instant profits. And that is what the rising exposure of even small investors in the F&O segment signal to me, and that is a worry. Because we don't want to go through boom and bust cycles again and again and again.
All right, so that's the view coming in from the chief economic advisor, in fact, talking about the markets as well. And he said that one of the issues in capital formation will be the short-termism mindset that people have. But also you had a lot of commentary coming in from SEBI chairperson also over the last few days on the capital markets. You had Uday Kotak also speak a short while ago. But where is the market headed from here on? What should you make of this sort of setting that you are seeing, or setting pressure that you're seeing on the broader markets? Let me bring on board our guest for today, and before that, let me also inform all of our viewers that today on Buy Now Sell Now, it is going to be a techie special. We have two technical analysts. I think we have Kunal Bothra as well as Kush Bohra on the show. Very good morning to both of you, and I must say both of you are KBs, isn't it, Kush Bohra? I hope I don't end up mixing up names today, but I'm sure that one thing...
You don't have to worry, because both of them will answer according to the chat, so we don't have a worry on that front at least.
Absolutely. Like you mentioned, they will talk about the charts. So let's talk about charts then. Kunal, let me come first to you. BSE small cap index over the last 12 trading sessions has fallen in excess of about 7% or so. Do you think that the selling pressure is done now, or do you see some more scope of a downside? But let's not forget, because broader markets have run ahead of the benchmark indices over the last 1 year or so, right?
So absolutely yes, Cheryl, and look at this in the context of what has happened, what has transpired in the last 1 year. So in the same time last year, in March 2023, we were almost at 8,600 levels for the small cap index. The index managed to shoot up to almost 16,600, 700 mark for itself, which means a return of almost 1x, 100% return broadly for the small cap index. Right now, we are just at 14,600 levels, and the panic has started to seep into the markets as such. So after an 8,000 point correction, if you're seeing a 8,000 point rally, if you're seeing a 2,000 point correction, we would probably term this as just a correction in the bigger theme, in a bigger play in terms of a trend, structural trend for the indices. The small cap index has broken below the 50 and the 100 moving average, and I think the concern for the index is now that it's managed to now show signs of weakness on a lot of indicator fronts. So I would believe what could transpire now is that individually or few small cap and mid cap stocks, they would continue to have a selling spree on the downside, but there are many stocks which have actually entered into the oversold territory. These stocks may see a rebound, so it could now going forward be a bit of a mixed reaction rather than a complete sell-off which we're seeing in the last couple of days for the indices.
Okay, Kush, good morning. And, let's take the market question to you as well then. And, even when you look at the benchmark indices, every day you see it open, the 22,400, around those levels, slightly above that. But after that, we see a fall coming in there as well. Obviously, broader markets are seeing a carnage. But what's your view over here then?
So, hi, Vinny. First up, a very good morning to you, Shail, and Kunal as well. See, what's happening is that there's a very clear shift that's happening from the small cap and the mid cap space, to the large cap space. Hence, these indices are not really painting a true picture, if I may call it that. HDFC started to do well. Reliance TCS are also contributing, and hence, the fall isn't as much, but the pain that everyone's feeling in the market because of the small cap and the mid cap positions that they have is actually far more than what the indices are suggesting. Now, if this smart money shift continues, then you will see this phenomenon for some time, where 21,800 to 22,200 will be a strong support zone for the market. And even if there's a downturn, the market could consolidate within this band, while the small caps and the mid caps, go on continuing to perhaps consolidate with a negative bias. Just one quick point to add, along with what Kunal already mentioned. If you see on the daily charts, the small cap index, the small cap 100 also has actually entered the oversold territory, is actually approaching that. So there could be some sort of a rebound, but I agree with Kunal on this, that there'll be a lot of stocks that will start seeing some sort of a rebound rather than perhaps the index as a whole that we saw for the last, I think, about 12 to 18 months. So the index could continue to consolidate, and small caps and mid caps will have to be extremely selective going forward.
Selective when it comes to the broader markets, but then when you have to select which of the sectors do you think are the safe havens right now, actually, Kunal, given the fact that we've seen a downfall come in the markets. Today you only have the FMCG index and the IT index holding on to a shade of green, FMCG also owing mainly to what is exactly happening with ITC, and then you have also Britannia and Nestle gaining in trade. So where you see a safe pocket right now, which are the sectors that you feel things are a little bit easy?
See, I think today's sell-off has to be also looked at in the context of what has transpired over the last 1 year, 2 years. There was a phase where large cap stocks had usually underperformed. And, that's the irony of markets, because in the month of December, January first half, most of the market was actually thinking that why are the large cap stocks underperforming and why the mid caps and small caps are outperforming. And I think that's completely reversed now over the last 1.5 odd month. That's what we can decisively sense on the charts as well. So going forward, I would believe that a balanced approach now could be a much more prudent approach. What the markets have shown is that high beta stocks, the mid caps and small caps, have capacity to rally up significantly higher, and they also have capacity to correct very sharply. So you have to be balanced in terms of your portfolio, the kind of stocks which you pick up. Now, it has to be, of course, a mix of large caps and small caps. I would not say that completely skew your stocks and your portfolio towards large cap stocks and omit the mid caps and small caps. If you find quality mid caps and small cap names, and if they are available at 30, 40, 50% discount from their previous prices, previous swing highs, I think that could be a very good buy opportunity there as well.
Okay, that's the view coming in on the markets from both Kush as well as Kunal. But on that note, we're going to slip into a very short break, viewers. But don't go anywhere, because after the break, we'll be taking all your stock-related queries. And today is a techie special. We will be taking all your short-term queries. Go crazy. Today is the day you can send us all your short-term queries. We'll be taking them with Kush as well as Kunal. So don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. And today is the techie special right here on Buy Now, Sell Now. We have two technical analysts. Both of them track the markets like a hawk on the charts. We have Kunal Bothra as well as Kush Bohra joining us on the show. Once again, good morning, Kush as well as Kunal. Thank you so much for joining us. And it's great to have both of you all together, and actually I think the entire show is going to be a rapid fire show, looks like it, given the fact that we're going to have a lot of short term queries answered right now. And today the first query I'll take from Satya, and Kunal, this one is for you. He wants to know whether he should make fresh buys in small and mid cap stocks. We did speak at length what exactly is happening in the broader markets. Now he has some choices and he wants to know if his choices are good or no according to you for 1 to 2 year time frame. GSFC, Rico Auto, IDFC First and Westlife.
So I think IDFC First, Westlife, GSFC, these are three of the good names which you can have from your mid caps. Now I'm not sure of the individual percentages, how the stocks have corrected, but I sense that I think IDFC First from 100 levels has come back towards slight below the 80 mark. GSFC also, I think if I'm not wrong, has corrected more than 30-35% from 300 plus levels to now sub 200 mark. So which means that a sizable correction of 30 to 40% is in place for many of these names. And you also have to look at the historical charts, which apparently for many of the names is on the more positive side, where you've seen strong durable price volume breakouts on these stocks on the longer term basis. So I think a 30 to 40% correction is a good starting point if you're looking to build your portfolios.
The next query is on Swan Energy. This is from Anupama from Abu Dhabi. Kush, she has 100 shares of Swan Energy at a price of 756. So obviously, clearly, they're making a loss on this one. What would you recommend? Should they continue to hold this? Maybe exit, average at current levels?
Averaging is not something that I'm a big fan of. However, it will not be a bad idea to consider averaging here, or at least this stock, not the levels perhaps. Today is the first day after 8-9 sessions that the stock's actually attempting a rebound from an oversold territory. My suggestion would be to hold. She's obviously got into the stock at a slightly higher level. I mean, not slightly, but quite a higher level. But not a bad idea to hold on to this one. It had run up quite fast. There is a strong support zone placed at about 520 and then about 490 odd levels. So it's approaching those support levels. If it does take support and does rebound from there, then it'll be a good idea to average around those levels. So my suggestion, hold for now, average close to 520, 530 kind of levels. And the existing position, I think the holding period could be a little longer, but I think she should perhaps be able to see her rates in some time to come.
Kunal, the next query, this one is on Devyani International. Thomas George from Kochi has 600 shares of Devyani International at a price of 165. What should they do? Buy, sell, hold?
Well, you can just hold on to the stock as of now. I think the long-term support for Devyani International is closer to 135. This was the exact or almost the exact level where in 2023 first half, where the stock had bottomed out and from there had rallied back towards 220, 230 plus levels for itself. So on the way down, I believe that at 135, the stock may take a good support. So as of now, hold, but maybe closer to 135. The market conditions are also extremely oversold. Then I think it could be a good level where you can look to average and bring your average or net cost price much lower.
All right, this one's for you, Kush from Mohan. He's writing to us from Hyderabad. He has 460 shares of Irida, which he purchased at 32 rupees per share. He wants to add some more in his portfolio, around 5,000 more shares. He wants to know when is the right time that he can look to buy this particular counter, and his time horizon is about 2 years. I know Irida, very recently listed counter. The chart history will be very limited, but this one in the limited time also has done fireworks.
It had, and then it just gave away, right? So, as you said, the data is very limited on this one, but from whatever data is available, I think there's a nice support coming in at about 120 to 110 kind of zones. Plus, after the fall, the stock is actually approaching the oversold territory, so you could see some sort of a rebound from those levels also. So, if he does want to accumulate, then I suppose 110, 115 is a good level to add some more. That's where the recent fall could halt. At the moment there are no signs that the stock could halt, but we're just extending some of the ratios and some of the analysis here, and perhaps 110, 115 would be a good time where he could look at accumulating some more. Not at the moment.
Kunal, we have Bharatwaj from Coimbatore who has a query on NCC. They want to know at the current market price, how is NCC looking? Should one look to enter the stock if they have a medium-term outlook?
I think you should wait out for maybe one more round of correction to come back into this name. So yes, it's corrected from 260 levels to 218. But given the way many of these stocks are showing corrections, as well as the rally for NCC from being a two-digit stock, I think sub 60, sub 70 levels to a point when the stock was almost at 250, 260 plus mark. So the rally has been quite steep. So the correction also should result into the stock at least bouncing back towards the midpoint of 50 and the 100 moving average. That may be closer to 200 levels for NCC. So I would suggest to wait out for one more round of correction for the stock and then look to buy back on lower levels.
All right, let's move on then and let's talk about the next stock. Also, I cannot stop thinking that what a day. All three of us are wearing the shades of black, but Kunal is donning the animal look, isn't it, Kunal? Was that your recent watch over the long weekend? And you've taken inspiration from that?
Not really, but it's just matter of choice.
Oh, matter of choice. Good choice, I must say, given that I'm also wearing the shade of black today. But let me take this next query coming in from Prathamesh. He's writing to us from Mumbai. He's holding about 150 shares of Suntech Realty at a price of 493 rupees per share. Is it advisable to go ahead and average at current levels? He can hold on for the next 1 year is what he's saying. And I know, Kush, every time we ask you about averaging out, you say you're not a big fan of averaging. But what should he do right now with Suntech Realty?
Like a broken record, right? don't average just yet. And but let me put it this way: there are times in the market when averaging makes sense. Most of the times it doesn't. When a stock is on a rebound from a strong support zone, that's perhaps a good time. Right now, if you see the setup for Suntech Realty, it's approaching the 200-day moving average, which is close to 410. If that is broken, then the stock could slide further, and there are no signs of the stock stopping the fall just yet. So whenever we see the stock stemming the fall and perhaps attempting a rebound, is a good time to average. Right now, my suggestion would be hold on to the current position. If you're looking for a positional stop loss, then I think 399 should be your stop loss. If that is broken, then the stock could actually worsen further. So at the moment, my suggestion would be to hold with a stop loss of 399.
Okay, the next query is from Pradeep from Kolkata. And Kunal, this one is in terms of 1 year time period holding. They are already holding 100 shares of MAN Aluminium at a price of 85 rupees and Kalyan Jewellers at 106 rupees. What should they be doing with this? Should they book out profits and look at something like a Suzlon or continue to hold this?
No, not at all. So I think the first part is that you can look to book out profits. MAN Aluminium I don't track, so I'll skip that. But Kalyan Jewellers, I believe again a very good performing stock over the longer term basis. The stock now is going through a corrective phase, but I think it's a good time where you can look to book out at least partial profits, 50% profits on the stock, but definitely not suggesting to switch to stocks like Suzlon. As I mentioned earlier, that I think it's a very good time to try and balance out your portfolio between large caps and quality mid caps and small cap names, if in case you are interested in that kind of a category. But I believe that balancing it out between large caps and the mid caps is a way out in this kind of a market. So not suggesting a shift to stocks like Suzlon, but yeah, I think part profit for Kalyan Jewellers is what I would recommend.
All right, this one is coming in from Sitaram Ganesh. She's writing to us from Chennai. Apologies, could not take your query earlier. Third day in a row he's written to us. And he has Polycab with 30% profit. Can he exit now and invest in Havells or any other defense counters? Kush, what's your take on Polycab? It's great to know that he's actually holding on to some sort of a profit given the fact what happened to Polycab in the month of January. But yes, the stock also had seen a spectacular runaway rally. So what's your take coming in? Should he exit now with the profit and invest in Havells, or do you think a defense name would be apt?
So even if you see purely on the relative strength basis, the stock hasn't really given way, at all. In fact, in the last couple of sessions, it's only, added. If you see it on a weekly basis, it's just added some more gain. So I think there is no reason per se from a setup perspective to exit Polycab. I think 5,050 and then 5,200 are quite realistic targets on Polycab. I think once the market settles and starts to move higher, the kind of strength that we are seeing in Polycab, this is a strong candidate for, in fact, a fresh addition also. And if he does want to average, why not average on the higher side, which is also called pyramiding, by the way. So Polycab, in fact, is a stock where he can average on the higher side, add some more. He could switch to some of the, defensive or other defense stocks. But really, I mean, on a setup basis, Polycab alone is quite strong. So just hold on to this one and add some more if you can.
Okay, let's move on and actually just look at what the markets are doing right now as well, right? Further fall has come into the markets, trading at the day's lowest point as of now is the benchmark indices Nifty down 6/10 to 7/10% in trade as of now as well. Like you can see on your screens, 22,200 levels, below that levels 22,185 is what the Nifty is trading at. Nifty IT, that's also slipped into the red as well, trading with a marginal cut of 0.1% as well, while Nifty FMCG is managing to hold on to some bit of a gain there. While obviously in terms of Nalco, PFC, we have Power Grid, Adani Enterprises, HAL, which are seeing a sharper fall of around 5 to 6%, all these stocks as well. So clear fall that is coming in the broader markets that has still continued and deepened further as well. So yes, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more of a stock-related queries after the break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Today is the Techie Special. We'll be taking all of your short-term related queries with our chartist, Kunal Bothra and Kush Bohra. We have both of them together in one frame, as you can see. Let me take this query, actually, Kunal. And this one is from Najib from Calicut. He's an ex-NRI. He entered the market just in January 2023. He has invested 70% of his earnings in stocks, 75% in small and mid caps, 25% in large caps. He's saying that we've been seeing a huge crash in the small and mid cap space over the last few trading sessions. He is getting tense looking at this sort of a fall, so he wants to know if he can hold on for a year or so. He's saying currently he's in 35% profit on his total investments. It's mainly few stocks which actually saw their solid run up. So it's from the railway pack, the Adani Group counters, or the PSU Bank or so. He's saying he has no problem holding on for the next 1 to 2 years. But yes, he's getting tense, and I think a lot of them who must be entering the markets and who've actually primarily invested in the small and mid cap space, I'm sure they will be getting perturbed looking at this move. But let's not forget, over the last 1 year, 60% up move anyways, the index has seen.
Absolutely, yes, Cheryl. And, but I think with the viewer query, there's a fundamental issue over here where, you've invested majority of your portion of your portfolio into mid and small cap names. That is one of the, biggest error which we tend to make, when the markets are going all guns blazing, because we know that when the tide turns, the mid caps and small caps would erode the value, and I'm sure you have definitely experienced that. So it always makes sense to have at least 70 to 75% portfolio skewed towards larger cap names, which would act as more protective in terms of market turnarounds. And even by the net returns which you have gained right now, 30-35%, that's a classic return for mid caps and small caps on a CAGR basis when we look at this on a 10-year, 15-year kind of returns for the indices. So which means you've come back to the mean reversion. It's now, I think, a very good time to try and tweak your portfolios. Now, I'm not sure what are the kind of stocks which you already have in your portfolio, but I think it's a very good time to try and tweak your portfolio, get back to the the traditional scheme where you're skewed more towards large cap names, cut out your mid cap stocks depending on how you want to proportion your portfolio in terms of sectors, in terms of market cap, etc. But I think it's a very good time to try and tweak your portfolio and come back to that traditional theme of more large caps rather than extremely high mid caps and small caps.
All right. So, when a technical analyst talks about fundamental strategy, you know that where you've gone wrong when it comes to investing in the markets. And one of the biggest thing, and I believe for all of our viewers out there, you have to try to curtail that urge of getting greedy in the markets. And also always when you are investing in markets, take sound advice and also keep fundamentals in mind. And yes, try and invest more in the large cap space than allocating a huge lump sum in the small cap space, isn't it, Vinny?
Absolutely, really. That is, I think that greed has to have some sort of fear that you have to have instead of being, just be safe from before. Invest more in terms of the skew towards your large cap side is what Kunal's advice, or anyone would advise you all if you're starting off as well. But Kush, let's talk about the next query. This one is from Krish, and he's holding SRF. 59 shares at a price of 2,400 and Solar Industries at a price of 6,500 rupees. What would you think about both these stocks? They want to switch, get out of SRF completely and move all of it to Solar Industries. Is that something you would advise?
So purely on a setup basis, it does look like a fair, switch. Because if you see SRF, there was a lot of promise, but that hasn't been delivered on, some of these names. Although the stock is attempting a rebound, and the kind of wealth generator SRF has been over the years, if the view is long term, it's not a bad idea to perhaps continue holding on to this one. The stock's seen but a minor dip, and it's very the stock is even currently very close to the buying price. So my suggestion would be to hold on to this one. It's not really such a bad move at all. Solar Industries, on the other hand, does look like a very good trade. On a weekly setup, we've seen the volume spike up quite a bit. It's broken above the resistance zone of 7,500. So I think from here on there could be higher higher levels on this stock. You see, my belief is that he's perhaps already holding Solar Industries already. So if he's continuing, then hold SRF and Solar Industries both, and there's really no need to shift to Solar Industries completely from SRF. As we were just discussing a while back, you need to create portfolio for all seasons, and right now even an HDFC Bank is not looking like a bad investment. Especially when you compare them to small and mid cap. So hold on to both. If you don't have solar, switch partially from SRF to solar, not completely.
Right, Kunal, next one is for you, coming in from Sagar. He wants your view on SBI card. He's saying that he's been shorting this counter for the last 8 to 9 months, and he's also mentioned that it's his favorite stock to go ahead and short. Do you see further downside, or is it better to book out now?
So I think you can continue to trail stop losses and hold on to the short positions over here. I think what I can see as a pattern for SBI cards is that on the monthly basis, the stock has been making consistent, fresh lows, lower highs and lower lows on the monthly charts. So maybe this month's high could be kept as a trailing stop loss, which I think, if I'm not wrong, on the spot levels is closer to 725.
Okay, on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more of the stock-related queries after the break.
Energy low.
In the game of life, stay protected with ICICI Lombard Health Insurance.
Power restored.
Just close the doors, and you're in a world of your own. Travel is not just about the destination, it's also about how you get there. Fly Emirates, fly better.
जैसे कि आप देख सकते हो कि भारी मात्रा में भीड़ इकट्ठा हुई है यहाँ।
वो
आपकी आंखों को हर जगह अपनी बेटी नजर आती है। पता नहीं हमारे बच्चे कहाँ होंगे।
कैसे भी हो वापस लाएगा वो, भरोसा रख।
मैंने कहा था ना, कैसी भी सिचुएशन हो मोदी जी हमें घर ले आएंगे। वॉर रुकवा दी पापा, और फिर हमारी बस निकाली पापा।
देखा, चाहे दो देशों का संघर्ष हो या कोई आपदा, जो रक्षा करे हमारी 7 समंदर पार, वो है हमारा परिवार।
हम करते हैं उनसे बेहद प्यार।
मेरा भारत, मेरा परिवार।
आपका बैंक
सेविंग्स अकाउंट पे इंटरेस्ट देता है
3 महीने में एक बार।
मेरा एयू हर महीने। सोच बदलो और बैंक भी। एयू स्मॉल फाइनेंस बैंक, बदलाव हमसे है।
LIC presents Dhanvriddhi, an attractive single premium policy which gives guaranteed maturity with high guaranteed additions. Hurry, contact your LIC agent today.
अमित जी, आप रोज बीकाजी भुजिया खाते हैं?
नो नो नो, रोज नहीं, सिर्फ हफ्ते में 7 दिन।
Amit ji loves Bikaji. Hi, what's that? That's a Manish Malhotra. Not your dress. The cupboard. The laminate is a Manish Malhotra design.
Century Laminates by Manish Malhotra. Fashion for your furniture.
Live it up, live it up.
Welcome back. You're watching Buy Now, Sell Now on ET. Now, a sharper fall that we've seen coming in the index as well, down almost 0.9% is what the Nifty is. 22,140 levels approximately is what it's trading at the day's lowest point. But let's get started with the rapid fire then for all the stock related queries. And the next query, this one, Kunal, is on by Manish, and this one is on JSPL. They're holding fall rods of JSPL from 820 levels for March expiry. What's the advice?
I think it's a good time where you should look to hedge your position by buying in the money put, which is now 8 in strike.
Alright, this one is coming from Reena Thomas for you, Kush. 125 shares of Concord recently purchased at levels of 1,008 rupees per share. The stock is seeing some downtick. What should she do?
Continue to hold a positional stop losses at 860. The stock could see a rebound in the coming days.
Okay, Kunal, this next query is from Sunny from Kolkata, and they want to know on GAIL. Seems like they're trapped in GAIL for some time now. Kunal, what's your view on this one? GAIL, they're holding 200 shares at a price of 190. View on swing trades also is something they're asking.
So, on GAIL specifically, I think the stock has broken below its key support levels. 180 was the previous support for the stock. So, trading below those levels would expect the stock to correct further, at least over the near term.
Alright, Padma Sivarao wants to know about Marico. What are the charts telling? Is this the right price to buy, Kush?
Not yet. I would wait for some more time. The stock is attempting to take a support, but I would still wait for some more indication.
Okay, Kunal, we have Supratim Chakravarti, who's purchased Manappuram Finance at an average price of 180 rupees per share. Should they continue to hold, sell, or maybe look to average?
Not to average, definitely. You can hold, but I believe the stock has capacity to correct towards 150, 155 mark also.
Alright, we have Guru who's written to us for 3 stocks, but let me ask about Campus Activewear then. Kush, do you think this one is a good stock to buy right now?
Not at all. The entire pack's been under a lot of pressure, and the stock too continues to reel under pressure. It could perhaps slip to 200 levels, so not a good time to enter at the moment.
Kunal, we have Carol who wants to know on Godrej Properties and L&T Finance. What's the target price for both these stocks? They purchased Godrej Properties at 2,100 and L&T Finance at 126 rupees.
I think both the stocks I would recommend to book profits at current levels.
Alright, Kush, let me slip this one in. CG Power Tube Investments, do you think these are good buys at current price? If not, any mid-cap stock that you think is worth buying?
So CG Power is consolidating. I think this is something that they can hold on to. A fresh entry also perhaps at this time for a small quantity, not a bad idea. Targets would be about 475. Cube Investment also again at a very strong support zone. So here also they can consider a fresh entry. The targets here would be about 3600, 3650. So both the stocks can be added at the current level.
Kunal, this last one, Anish from Hyderabad is holding Religare Enterprise at a price of 229. What's your view on this? Buy, sell, hold, average?
Continue to hold on. Closer to 180 is where you should look to average.
Alright, with that we come to the end of the extended rapid fire as well as the techie special. Thank you so much, Kunal, as well as Kush for joining us on the show on this special episode, as well as sharing your tips coming in on the markets, or rather sharing your views that come in on the markets. But with that, it's a goodbye for Winnie, myself and the team that put the show together. But before we
If you like this video, then like, share and subscribe to ET Now.